Well, good morning, traders, and welcome to followmetrades.com Saturday scanning, where we're going to be looking for some great trades. So glad to have you here. Patrick says loud and clear. Good. Thank you for that. Hey, make sure you can locate the chat feature on the Zoom webinar platform, because definitely want to make this interactive. I'd be happy to answer any questions you have. Love to hear your comments. And as we start looking at charts, I'd be happy to look at any symbols that you are interested in. So you want to make sure you can locate the chat panel so you can communicate with me. We can chat. So go ahead and find that. There's also a place where you can raise your hand, and then right next to that is the little chat bubble thing. Click on that. It'll bring up a panel where you can type in a chat and comments. But go ahead and type in where you're calling in from. It's always fun to see, and just to make sure you can locate that functionality. And Paul's already on it from Charlotte. You know, I'm calling in here from just south of Seattle, about an hour south of Seattle in Washington State, and it is a beautiful spring morning. It is nice out. Al's from South Carolina. Amit from India. Ahmedabad, I believe. Grand Rapids. Lorna from Phoenix. Nick's in San Antonio. My little sister lives in San Antonio. We go visit once in a while. It's nice there. Jeremy says no audio. I think everybody else can hear okay. So Jeremy, turn up the volume. Oh, you can't hear me. Gig Harbor. Hey, Dean. Another Dean close by. Beautiful day, huh? Patrick from Vermont. Myron from good morning. Audio's great, says Nick. Yeah, I think it's working okay. All right, looks like people are still logging in, but we're going to press on because you guys are here on time. Shah from India. Hey, thanks for calling in. I've actually been to India. I used to work for Intel Corporation and I traveled there. Richard, good morning. Glenn's from East Stroudsburg, PA. But we got a lot of customers in PA for some reason. Austin's calling in from Toronto. Very good. Well, like I said, let's go ahead and get this thing going. First, before we get started, I just want to, make a quick mention here that I'm a trader just like you. I'm not a financial advisor, and I'll be looking at, scanning for trades in the market and offering my opinion and calling out trades, identifying trades that I like. But whether any individual ends up placing an order, making a trade, participating in the market, that's each individual's choice. Only you know what's appropriate for you. So I share what I'm doing. Each person makes their own choice. I'm not giving financial advice. So hopefully that's fair. Joe says the voice is so low. I think everybody else said it's loud and clear. So maybe check the volume, Joe, on your computer or your device. Well, I know not all of you know me. So let me introduce myself. And yes, Glenn, it is being recorded. So I'm Dean Jenkins. I'm the founder of followmetrades.com. I've been trading and investing for, over 25 years now. And it really started when I was working for Intel Corporation. I started in 1993. And as part of our compensation, they gave us stock and options and, employee stock purchase, option grants and stuff. And, back then, that was the beginning of the dot-com boom. Intel doubled and split every 2 years like clockwork. And so I really saw the power of, how the market could do, if you tapped into a good rising stock. And, it wasn't long before we didn't care much about our base pay. We only cared about how many options we got because we were making a lot of money. During that time working at Intel, I got an MBA from University of Washington. And for years, I was a fundamental trader. I was off analyzing financial statements and all that kind of stuff, putting in a lot of work, doing what I'd been taught in business school. And I just found it to be completely frustrating. Ultimately, I got mixed results. You get a good company and the results should go up, but they didn't. And you get a company that didn't look that good, kind of shaky and poor results. And it would go up and good company would go down. And it's like, what's going on here? I stepped back from the market for a couple of years. In 2007, and that was just pure luck. I just got frustrated with the whole fundamental trading thing and the unpredictable nature of it. So I just moved my money to cash and sat on the sideline to think things through, and then the market tanked, and that was pure luck. And then as it looked like things were starting to come back, I just couldn't stay out. And so I actually got back in. I bought Bank of America at $5, and it went to 12. And that was stressful. Even having a stunning winning trade, more than double your money, was stressful because I didn't know what to do, when to get out. Should I stay in for more profit, or if I get out, am I going to give? Am I going to, we're going to give it away? So I got interested in technical trading in about 2010. I just kept thinking there's got to be a way to bring some kind of order to trading, and there's got to be. I always thought that there were patterns on charts, and I just wanted to decode that a little bit and see if we could benefit from them. And so in about 2012, I finally settled on the current trading system that I'm using now. It took a lot of wrong turns and mistakes, and about lots of magic indicators, and like a lot of people was led down paths of unrealistic promises. But I finally settled on the current trading system and started getting consistent results. And then 3 years ago, 2015, I launched this company, followmetrades.com. And we've been doing pretty well since then. So stay with me during this presentation if you want to get full value out of it. I'm going to explain the setups that I'm looking for first, because if we're going to look at charts, I'm going to say I like it or don't like it. I should at least give you the criteria for that. Then I'm going to walk through my scanning technique, and then we're going to go find some great trades. I'm going to apply those techniques to the current markets and see if we can find something. And then I'd be happy to look toward the end at any stocks you're interested in. And I might just love some of your ideas. Some of the, I often get great trades from forums just like this, so it's a nice two-way street. I'm going to be looking for trade ideas and share them with you. And maybe you've got some too. And then if we have time, I'll take a look at some option contracts on good trades that we identify. So stay with me if you want to get the most out of this, because if you're multitasking, you might miss something important. It is being recorded, and you can go back and watch it later, though, that's for sure. My trading resume, I call it. Ultimately, what matters is, what kind of results you get. And here's my website, followmetrades.com, and I post my annual returns right here on the home page. Each week we're averaging about 30% per year, and I believe in complete transparency, so you can click on these green buttons and see the details of every single trade for a given year, right? The good, the bad, and the ugly. And I also, again, believe in transparency, and what I post here on the website is audited. For about a year now, I've had a third-party CPA firm who audits my results. When I post on the website, every quarter I give them my brokerage statements, and they produce a report and compare what I say I'm doing to what's actually happening in my account. So that's my trading resume. And yeah, I'm pleased. Always want to make more, but we've had consistent gains. All right. So part of what I've learned over these years of trading a variety of methods, and then in the last several years, this method that I'm using now, and this applies really to, doesn't matter what indicators you use, what setups you use, what time frame you trade, or even whether you trade forex futures, stock options. These things I think are universal, and that is, to be a consistently profitable trader, you need, these things are essential. You got to have great trade setups. You got to have an edge in the market. You got to have a greater probability of winning than you do losing. Makes sense, right? And so you need a high probability outcome. You need a great reward to risk ratio. The amount, this is even more important than your win ratio, is the payout ratio. You got to have a good reward to risk on trades going in. They got to have the potential to make more money if they win than they would lose if they fail. I think it's really important. And I know there's a lot of popular trading systems that it maybe isn't clear, but they have a terrible reward to risk ratio. You got to have risk management. You got to control the downside, and you got to manage trades. Risk management, trade management are different things. So we'll go through this in just a little bit of detail here. Let's have fun for just a minute with it. Let's talk about. I'm going to turn the camera off so you can see the screen. Hopefully I'm not over any of the information here. Okay. So talk about casinos, and it does relate to trading, right? So these people are having a great time. They're at the casino. They're rolling dice at the craps table there. They're drinking their drinks, and they must be on a good run because they're all smiling and laughing, right? And hopefully they view their trip to the casino as entertainment, not as an investment, because it's kind of stacked against them, right? So the people on the floor there, the happy people, happy for now, they're gambling. The casino owners are not gambling, right? There's some people with green eye shades sitting upstairs, watching the cameras, watching the money. They're not gambling, right? they're in business and they intend to make money. And they ensure that they're going to make money by controlling two variables. They control probability and they control risk. Let's look at an example of that. Here's a simple game. And this applies to, you know, these concepts apply to every single game on the gaming floor and every single pit in the casino. Right? But here's roulette. It seems so simple. The numbers are 1 to 36. Half the number's black, half the number's red. So there's even odds, 50-50 chance that you would get red, black, or even odd number. And there's a 1-to-1 payout. If you bet 10 bucks, you're going to win 20 if you win. Seems really simple. Let's look at our roulette wheel. Hey, what's up? We got 1 through 36, red, black, but we got these green spots. 0, 0, 0. What is up with the green spots? Well, the green spots change everything. The green spots change the odds from 50-50 win, red, black, even, odd, to a 47.5% win probability per spin for the player who is betting red or black or even or odd. Uh-oh, that shifted just a little bit. And the casino makes all their profit on this 2.5% edge. They will win 52.5% of the time, and that is absolutely enough. And over tens of thousands of spins, right, they're going to make money. They're going to make more money than they lose. And they're actually happy that people win occasionally because it encourages other people to keep playing, right? So the casino ensures their profit via two mechanisms. Like I said, they ensure they have a probability edge and they control risk. And the probability is controlled by the two green spots. They make sure that, you know, it's not 50-50, that it's 52.5 in their favor. And then the risk is controlled via table limits. So you can't walk in and bet $1 million on the black because there's a 47.5% chance you would win, and that's unacceptable to the casino. They can't take that big of a loss on a single bet. So they have a table limit. Maybe it's $100, $200. It's different for each game, each pit. But they figure out, you know, how much they're willing to lose, and they absolutely do not let you win more than a certain amount. And they figured it out that over time, right, they're going to make money. They have an edge and they control risk. So we can do that too. You know, why not be the house? We can do the exact same thing in our trading. We can have an edge. We can know that we're going to win more than we can lose, and we control risk so the ones that do lose are small. And we can even do something that the casinos cannot do, and that is we can increase the reward to risk ratio. So we can ensure that the winners are bigger than the losers. And that's even an extra cool thing, again, that the casino owners don't do. All right, so to be a consistently profitable trader, these three things are essential. Great trade setups. So let's take a look at, here's what I use for trade setups. And I'll just go real quickly through it. Again, we're going to be looking at live charts, looking for trades. So I'll tell you what I'm looking for. I use the Ichimoku cloud as part of my analysis. It's not my only analysis, but it's a cool thing. And Ichimoku cloud, what I'm really concerned with is this shaded area. You can see on this chart, it's primarily green. So that indicates an uptrend. And what the Ichimoku cloud does is confirm a trend, and then it projects support in an uptrend and resistance in a downtrend. So that's really valuable. So I like when price has broken above the cloud for a bearish trade, that helps me confirm that we're in an uptrend. And then when price breaks through it, I confirm that the trend has begun. And once we have new trends going on, we can project support and resistance areas through the life of that trend. So that's a helpful indicator, and you'll see it on my live charts here in a few minutes. So I use Elliott Wave. Very simple, repeatable version of Elliott Wave. There's probably some people now listening who may be rolling your eyes going, oh, Elliott Wave, I heard that, it's overly complex. You know, the practitioners can't agree on wave count. I can't see a wave count on a chart. I understand, I was there. And that's why I use a very simple version of Elliott Wave. If you want to learn more about it, there's a great book on Amazon by Bennett McDowell, and it's called Elliott Wave Technique Simplified. So I didn't write the book on Elliott Wave, but I helped. I did write a chapter in that book. And Bennett is my mentor, and you know, he taught me how to do this. And again, it's a very simple, repeatable approach. All we care about with Elliott Wave is looking for a big impulsive move. After an impulsive move, we expect a correction to a Fibonacci retracement level. And after the correction, we expect the trend to continue to a Fibonacci extension level. So what's really cool is we get price targets of where price would move to. Once it starts to follow a pattern, there's a pretty good chance it's going to finish the pattern. Once you get a wave 1, then 2, then 3, then 4, 5 becomes highly likely. I don't trade the ABC. I don't trade 1, 2. I just look for a big breakout into wave 3, then a correction into 4, and a continuation of the original trend into 5. It's that simple. Don't need to make it overly complex. I use Dow theory, again, to help confirm when we're still in a trend, when a trend has begun, and when a trend has ended. So it's very simple. Charles Dow wrote a theory in the 1890s, series of articles in the, I believe it was the Wall Street Journal, and they became published into books called, Dow theory. This is a simple part of it, a sliver of his overall theory. But what he said was, the definition of an uptrend is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. It seems overly simple, but when you're in a trend, I was talking about being in Bank of America and getting in at 5 and went to 12. If I'd had these tools, I could have figured out, was the trend still going, when to get in, when to get out. Because as long as an uptrend continues to put in highs, and when it pulls back, it does not go below the previous lows, the trend is still going. The same thing for a downtrend, lower lows, lower highs, lower lows, lower highs, trend continues. The trend ends when it does not put in a new high and it takes out a previous low. That's when we get out. So we can let these things run. We won't get out at the absolute top, but what we will do is stay with the trend. If we just use Dow theory, we'll stay with the trend until it's confirmed to be over. And an uptrend begins with a high, higher, low, new high. It ends with a low, lower, high, new low. Bear trend begins with a low, lower, high, new low, ends when it does not go put in a new low, and it goes take out previous lower highs. Again, very, very simple version of it. I don't trade based on any one indicator or any one rule, but rather I bring these things together, Ichimoku cloud, Elliott wave, Dow theory, to build a case for a trade. Okay. So those are the setups I'm looking for. And we'll look at live charts here in a minute, and we'll apply them to real charts. In fact, yeah, let's just keep going here. So the other thing that's essential to be successful as a trader over time is risk management. You got to control the loss. Every trade can lose, and you have to. A lot of traders intellectually accept that, but they don't internalize it emotionally to some kind of deep embedded level. But you have to accept that every trade could fail. And if you accept that every trade could fail, then you have to say, how much would I be willing to lose if this trade fails, since I know that it can? And that level has to be a pain-free level, an amount that would not be a setback, an amount that would not drain your account, right? It would not cause financial distress or psychological distress. Because if you take a big loser and you lose 20% of your account or more, right, that gets in your head and it affects your future trading for a while. And anybody ever experienced that? And I can raise my hand. Absolutely, I have early on before I learned these things. Right? Taking a big loss can cause depression, remorse, and again mess with your trading going forward. So you got to determine how much you're willing to lose, given that trades can lose. It has to be a pain-free level. I use 2%. I'm not willing to lose more than 2% of my account. That's different than the position size. That's how much am I willing to lose? Not that I don't want to. I want every trade to win, but I realize that some trades will lose. So I'm willing to lose 2% of my account on any given trade. And then part of this is position sizing. Figure out how many shares or contracts, right? How many to buy? How big should the position be for a given trade? And what I do is determine the stop level. The first thing I do on a trade is go, what's the stop level? And if you think back to Dow theory, my stop level is going to be set at a point that tells me the trend has ended. I'm going to put it at a natural support level or a natural resistance level based on price movement. So I'm going to figure out the stop, and then I'm going to calculate my position size by taking the difference between the entry price and the stop price. Because the difference between the entry and stop, if it goes from my entry to my stop, that's how much I'm going to lose per share or per contract. Then I divide that into 2% of my account. So $100,000 account, 2% is 2,000. I divide that loss per share into that, and it tells me how many shares to buy. What that means is I get my entry, it goes and hits the stop, I lose 2% of my account. I've limited my loss. And you know, in addition to identifying the stop, you have to actually execute the trade and get out. Right? I know some people do not like to have stop orders placed on their trades. They worry about market makers, gremlins taking out their stops and all these things. No, I don't have to debate that. What's important is you've identified a stop, you have some kind of alert mechanism, so you know when you hit the stop, you have the discipline to go close the trade when it happens. All right. The other thing you have to have is trade management. You gotta, once you're in a trade, you have to have a strategy for managing the trade. You know, when are you going to take profit? Would you add to the position? You gotta stay with winners for as long as possible, and you gotta exit the trade at the right time. Guillermo, do I use 2-day stops? I'm not really sure what you mean by a 2-day stop. I use price levels on the chart, and if the price level is hit, telling me that the trend has ended, something has changed with the trade, I get out, I close the trade. Trade management, again, different than risk management. Risk management is controlling how much you're willing, you know, how much you would lose if the trade fails. Trade management is all about what you do once you're in the trade. For taking profit, you can add to the position strategically. You want to stay with the winners for as long as possible. You want to exit the trade at the right time. You've got to have black and white rules for this, because if you don't have a black and white predetermined trade plan established before you get into the trade, while you're in the trade, there's a good chance that your actions would be driven by emotions rather than a trading plan, right? So trying to make decisions after you're in the trade is a little dicey. Guillermo, 2-day low, no, because the 2-day low doesn't mean anything to me. What means something to me is these the overall price pattern. And I'm not trading based on, you know, 1 or 2 or 3 or 4 price bars. I'm trading on a daily chart. I'm typically trading based on a year's worth of history. And so you know, this prior low may have been put in, you know, 2 days ago, 2 weeks ago, 2 months ago. I'm trading based on the overall price pattern on a chart. All right. So as I said, I put my stops at these logical, natural support levels, and then I trail them as price action plays out, as higher highs, higher lows, higher highs, higher lows are established. I trail my stop to the previous higher low in an uptrend. And so I just keep trailing it until the trend ends and stops me out. And I do take profit during the trend. I think a good part of trade management is, you know, I take profit in thirds as we cross Fibonacci lines or key reversal, or, you know, when there's earnings coming out or something like that. But I'll take profit, but I'm going to stay with these trends for as long as possible, trail my stop according to natural support and resistance areas based on price action. All right. So that's a quick run through of, you know, the trade setups and you know, my overall approach to trading. And I'm purely a technical trader. All my criteria for entering a trade is on the chart. I do go make sure that there's, you know, the company has sufficient liquidity. There's no disruptive events like Chapter 11, M&A, earnings report, drug report, something like that coming out. So I want to make sure there's no catastrophe looming that we can at least predict. But everything else is based on the technicals of the chart. All right. See that Larry has raised his hand. If you got a question, Larry, just go ahead and type it in. All right. So scanning, that's what we're here for. And I'm going to talk about my approach to scanning. How is it that you know, there's over 6,000 publicly traded companies on American stock exchanges, and then you throw in the ETFs, right? And who knows how many more that is. You probably get close to 10,000 tradable instruments. And, you know, how do you narrow that down? Because that's overwhelming to try and go find something in that huge ocean of symbols. So what I do is I create a big picture. I just stand back. You know, I'm watching the market every day. You know, we're analyzing it in the live trading room. I'm a news junkie. I pay attention to what's going on. And so I just, you know, step back for a minute when I'm getting ready to look for new trades. I go, what is going on? What's the big picture? And then I create a thesis of, you know, what do I think is happening, or what do I think should happen? Now, I'm certainly not going to trade based on what I think should happen, just kind of subjectively, kind of armchair daydreaming. But what I can do is take that thesis of what I think is happening or should happen and use it to narrow my focus to a particular area of the market or a particular list of stocks, and then go spend some time analyzing them. Because I can't analyze the entire market. So I just create a thesis, an idea, narrow that big list down to a manageable list. And then, I have to go look at charts and see what kind of price patterns, whether my rules are met there. Right? That's how I do it. So a couple questions here. How do I calculate trailing stops of trading options, Linda? Everything's determined by the underlying chart. So my stops are based on the price action, the price levels on the underlying chart. If I decide to trade that with an option, fine, I'll manage my risk on the option by how many I buy and what the price would go down to at the stop of the underlying. But everything's based on the underlying chart. Okay, and Miles, I'll get to your symbols here in a little bit. Guillermo. He's asking max losses. Once I hit, do I stop trading if I hit, some certain level of loss? And it looks like you're really talking about day trading. And that's a little bit different. I think it is wise for day trading to establish a loss threshold, and if you hit it, to walk away for a while, kind of get your head back in the game. When we're trading daily charts, and that's my sweet spot. I'm trading longer time frames. The concepts apply to any time frame, but I like the relaxed trading. I don't want to sit in front of a computer for 6 to 8 hours a day. I can do my scanning and set my trades up, literally for 2 or 3 hours a week, but all I have to spend trading, and I like that, right? And so those kind of rules for day trading would apply to me. Ali says, when the market's in a fast decline, even stops do not work. Yes and no. In a fast decline, I'm typically short, and we're making a lot of money, so that's great. But it is possible for a stock to gap through your stop and to have a bigger loss than planned. And that's why we control the position size. I never put more than 15% of my overall trading account in any given position. And Patrick, we'll take a look at those symbols here in a little bit. But first, we're going to scan. And I actually love finding companies I've never heard of before. I'll certainly trade NVIDIA or Amazon if the setup meets my criteria. But there's something cool about uncovering an unknown company and finding a great setup and getting a home run on it. I think that's fun. Let me show you an example. Here's whoever heard of this company, Tandem Diabetes Care Incorporated. We were doing a scan just like the one we're going to walk through here, and I identified a trade entry here at 503, published it to the StockPick subscribers. We took it in the trading room, and things gone nothing but up. Right, we're still in this trade, and it's at 890. We had a target of 884. It's beyond the target. Now, I don't exit at my target price. I use the target price to make sure there's sufficient potential profit. But I'm going to let it run for as long as it'll run. We've taken profit twice, so we've got a third of this position still running. But we're at nearly a 60% profit on this trade. And again, whoever heard of Tandem? They traded great liquidity. They had a great price setup. Everything was cool, so we took that trade. And that's just jolly good fun. All right. So my current thesis, as I stand back and think about what's going on in the market, what jumps out at me right now are two things. Oil prices are going up. Did you notice at the pump? I just saw a list of the top 5 most expensive states, for gasoline at the pump, and in my state, Washington's number 3. What's up with that? Right, we're paying about $3.30 for regular at the pump on average. But no matter where you live, right, you notice that the price of gas is going up, and that's because the price of oil is going up. Right, it's at highs that we haven't seen. It's at about 71 on crude oil. I haven't seen that since 2014, after having gone down to 30. Now we're up here about 71. So I scratch my head and I say, whoa, price of oil is going up. And it looks like it's going to stay up and maybe continue up. So who benefits from that? I don't think ExxonMobil and Chevron necessarily benefit, right? Because they're producers and retail, and they got complex businesses and they do all this. I don't think the big ExxonMobil and Chevron are the plays. But what about the people that supply the drillers and the drilling equipment people and the geophysicist companies and all this the whole ecosystem that supplies oil and gas and energy related services? What about them? They must be doing pretty good, right? Because there's a lot more capacity coming online. So that's my thesis. I could be wrong, right? But I'm going to go look and see if there's some good bullish trade setups in that sector. So here's how I do it. Again, I want to make this efficient. I want to make this pretty easy and quick. So I use a radar screen here on TradeStation as my trading platform. And I have a list of symbols. I've generated various lists over the years. I got a list of oil and energy related stocks that I've kind of filtered to make sure they have good liquidity, right? They're big enough to trade with, but not too big, right? So here's a list of about 54 oil, gas, energy related, suppliers. And what I do is I put them on radar screen, and then I apply some indicators. I look, when I have my charts up, I use the 200-day moving average. And I simply, because it's the most popular indicator for daily stock charts, if over half the traders in the market are looking at it, I probably should know what's going on with that indicator. So I wrote an indicator here that just tells me, is current price below the 200-day moving average or is it above it? That's all I want to know. And then how far from the 200 is it? How many days since it crossed over? And then I've got Ichimoku Cloud, which I talked about. And on this scan, it's simply looking for, hey, is price above the cloud or below it? And if we're above the cloud, the Ichimoku Cloud, and we're above the 200 day moving average, well, that's interesting. And then if it just crossed over, that's even more interesting. And so I generate these indicators. I can sort on a single column here, like I could sort on bars since cross, but I can't do a multi-level sort. So I just turned to Excel. What I did was took all that data from that radar screen, all the relevant data, and now I can do a multi-level sort. And let me see, Dave said, you live in Washington as well, Spokane, you go to Idaho and save 30 cents a gallon. Yeah. So I guess we got a lot of local taxes here, right? Paul, SLB, we'll take a look at that in a minute. All right, so let's do a multi-level sort here. Let's go, let's select all these here. Let's do data, sort. And what I'm gonna do is I'm gonna sort on, what I did was wrote some logic statements here in Excel. So if we are above the cloud with an uptrend, it's going to say that's true for a bull. And if it's below the cloud in a downtrend using the Ichimoku indicators, that's going to be true for a bear thing. Well, I'm interested in bullish trades. So I'm going to sort, if it's bullish, that's my first sort. And then I'm going to sort on bars since cross, and then how far price is from the 200. So let's just go ahead and sort. And it didn't work. What's going on? My data has headers. There we go. All right. Bull, sell value, smallest to largest. Bar since cross. Smallest to largest. Okay, and it's not sorting. How awesome is that? Don't you love it when technology doesn't work? Oh, here it is. It is. I think I had it going. I think I had it going backwards. There I go. False means they are not in either trend. They're in the cloud or neutral. But I'm really interested in the double positive here. So this gives me a list now of symbols that Ichimoku cloud is bullish. They're above the 200-day moving average, and they're sorting in an order of how long it's been since they crossed above the 200. Because I want to get in early in a trade, right? I want one that just broke. And so now we've got a list of candidates here that we can go look at the top ones on this list. Let's go do that. First one there is CLNE. Let me get my chart. So I'm just going to, now I can quickly look at these charts and see if they meet my criteria. And the method I use, I can spot whether we got a good pattern or not in a couple seconds. And I teach this. I have a master trader training course where I teach, exactly how to analyze these charts. And so this one actually looks good. It was in a massive downtrend, right? And I just look at a quick glance on Friday, it traded 2.8 million shares. So it probably got pretty good volume and liquidity. And, something new is going on. It's been in this massive downtrend. It looks like it found a bottom, and Dow theory, we got a high, higher low, new high. We got above the Ichimoku cloud. We got above the 200-day moving average. We got positive momentum down here on my price oscillator. That's pretty good. So now the question is, what's the target? Where do we think this could go to? And we use Fibonacci retracement levels. So we had a 3, we had a 4, we had a 5. So this already played out. So this looks like it could be a new trend. And so for a price target, since this is a new trend, they're very difficult to establish targets. It's not like an existing trend that's correcting. We can predict where it's going to correct to. What we do here is look at potential resistance areas at major highs. And the first major high here is at 303. Current price on this thing is at 196. So there's about $1 of potential profit. Our stop, remember, at natural support levels, we at 158. So we got an okay reward to risk ratio on this trade potentially. But that's not the best. So we'll keep that in the back of our mind. Let's go see. Next one here is PER. Okay, let's see what PER looks like. Okay, so this actually looks very similar, and the same. Now this one did not have a 3, 4, 5, so this could be a big 4 correction. So the potential area for correction, just using technical analysis, is up here at about $4. Well, that's compelling. Traded almost 500,000 shares, so we would check the average volume. But here's what's going on. There's something new going on, right? It was in this downtrend. We had this high, put in a low, so that didn't count, right? That's a new low. That's still the downtrend. We had a high, pulling back. It broke the cloud. It broke the 200. What we would want to see is to have it do that again. That would be something new. That would be something different. That would be an entry for me. Let me show you what that would look like. So again, we had a high and a new low, so that's just part of the ongoing downtrend. But we got this high, it's pulling back, and it broke. Right? Look how long it's been since it broke above the 200 and the cloud. So if it comes down and reverses up like this, I'd be looking at an entry right there. I like that one. So that's PER. If it hasn't happened yet, so that's a big if. But that'd be definitely one to keep on the watch list. Turn my pen off. All right. So that was PER. What was our next symbol here? It is EPE. This has been a pretty fruitful scan. So my thesis is looking pretty good. My thesis about a bullish change in trend for oil and gas and energy related suppliers. I think my thesis is holding some water here. Because we're seeing it. We're seeing some potential trades. First trade we looked at are good. Usually I have to look at 10 or 12 stocks before I start finding anything. EPE, it looks perfect. This is awesome. So we've got a potential resistance area here at 511, here at 692. We could take an entry here because we did have, just like I showed in the other chart, I was waiting for a high, a pullback, and then new highs. So this has confirmed, it's taken out prior resistance areas, right? You've missed the initial, the cool entry would have been, right about here, or, as it broke to 200, right about here. And it may pull back, but it looks good now. And our stop, natural support area right here, about 177, entry 288, first target 511. You can just see the distance. And this is what I'm looking for in terms of a good reward to risk ratio. Let me draw it, make it a little more evident. This is our risk. If it goes down and hits the stop, right, we're going to lose that much per share, 265 minus 177. Let me draw the line more correctly. It's actually here, isn't it? Right, to be accurate. Right, it's here. I'm going to lose this much per share if it goes down and hits my stop. If it goes and hits my target, if I'm right, I'm going to make this much per share. That's more than double this. That's over a 2-to-1 reward to risk ratio. That is compelling. That gets me excited. And what about, percent basis? So we get in at 288, goes to 511. That's over a 50% increase. That has my attention. Yeah, Sam, the white line is the 200-day simple moving average. All right, so we looked at the first three we looked at actually look pretty good. This is a pretty good list, pretty good sort. These oil drilling companies, if they hit 3 for 3 on drilling, they'd probably be pretty happy. Here's EMES. It looks bullish. Guillermo, yeah, I'm not day trading. I'm trading based on daily charts, 60-minute charts, and I'm in trades typically, days to weeks. So I'm not trading intraday. So EMES. So we're looking at a reversals correction zone from 1148 to 1509. I set my target at the low end to be conservative, and our natural support on this one would be here. So that would be our stop price, because if it goes below that, this thesis about the uptrend is over. There's our entry price, and there's our target. So it's still okay, about 1.5, so that's not bad. It's not as good as the last one. What do I think about 50 cents for the stop below my entry, 50 cents? I think it's a bad idea, Guillermo. I think it's a really bad idea to arbitrarily, and I hope I don't sound critical. I'm not trying to be judgmental, but what I've learned is just look at this chart, right? Just look at this chart. Let me get my, it's a good teaching point, right? Here's the uptrend price move. Here, and it pulled back to here. Here, and it's going to pull back to some level. And this is how the trend is going to move, right? So if I were to use 50 cents as my stop, if it goes down 50 cents, I'm getting out. Well, here's a natural move, right, from, let me get my cursor back, right? Just a natural part of price movement in this uptrend, right? It moved up to 748 and down to 673. So that's almost a 75-cent move on this stock, and that was natural part of price movement. So if I had a 50-cent arbitrarily determined stop, I would have been stopped out and lost the trade, even when price is just doing what it naturally does, right? Moving within its natural, its average true range. So I want to use price action to determine my stop level, right? It pulled down to that level. That's my stop. If it goes down beyond that level, this thesis has changed. So that's my riff on stop placement. All right. Now I can add to the position later if it keeps going my way. All right. So we hit 4 pretty good trades off that list. Now, I said, you know, big picture thesis, standing back, thinking about what's going on in the markets. I also am interested in pharmaceutical and biotech stocks. You know, you may have heard, if you're a news junkie like me, that the president made some comments yesterday about, you know, solving the price gouging problem with drug companies. And it was a campaign issue, and you know, all that doesn't matter what you think of the president. It doesn't matter what you think of the policy. It's out there in play, and it's interesting that the president made comments about limiting pricing on drug companies, and there was a rally in pharmaceutical stocks. And the reason for the rally, according to the commentators, was the proposals that the administration has today are much softer than what was talked about, the rhetoric during the campaign. So, you know, the administration intends to do something apparently about, you know, high drug prices, but their actions are not as extreme as maybe people had feared. So, a bit of a rally in pharmaceutical stocks on Friday. Well, I want to participate in a rally, and I want to know if it's going to continue. And so I use that exact same method. I just want to, you know, fast forward a little bit here. I went and got a list of pharmaceutical stocks. I ran the indicators for them on the radar screen, and then I came and dumped them onto Excel so I can sort here. And let's go see if we can find any bio or pharma that look pretty interesting. So first thing we want is, so we're looking for bullish trades here, and we want to go, don't make this mistake again, and we want to go bars since cross, and we want to go price from percent from price. There, and now we get a prioritized list of pharmaceutical biotech stocks that are bullish, and they just crossed over the 200, so this could be the beginning of a new trend. And now we got some symbols, you know, some top candidates to go look at. So let's go look at it. First one's TRVN. So hopefully that makes sense in terms of a way to take a thesis and you know, filter through the entire market and get down to a list of symbols pretty quickly and efficiently. Hey, I like this one. You know, it looks very similar to what we were looking at there in energy. You know, massive downtrend. You know, most impulsive trends ultimately correct. And in this company, Trevena, I have no idea who they are, right? I know what sector they're in, but I don't know anything about the company. But we could see a rally in this. Current price is at $1.92, right? We got a nice break here, high, you know, got a higher low, new high, pulled back right to the 200. The 200 is now support where it was resistance. That means the trend has shifted, right? If this thing only went from $2 to $3, that would be disappointing, wouldn't it? Only a 50% win. And it could just on a short covering rally. Nothing has to change about the company, right? It's about the market participants and their perception. So I would be happy to get in this at 2 and take it to 3, and it could go higher. So that's a good candidate. TRVN, I'm gonna make a note of that one. I don't want to lose that. Linda, what do I think of IBB? That's interesting. Let's come back to that. You know, we're going to make more on the, you know, it's kind of a trade-off. IBB is the pharmaceutical ETF, right? I believe that's the one you're asking about. So you make a trade-off, right? If you pick the right individual companies, the gains can be explosive. You know, they can also work against you in a dramatic fashion, and they can even gap below your stop. So, you know, you want to go for, you know, the big winners, or do you want to participate in ETF and maybe have smaller gains, but you know, kind of mute out the volatility of individual stocks? We'll look at IBB, see what the setup looks like. Let's look at the next one on the list here, KTWO. This is different than the last one. The last one is the corrective wave. This one, oh, okay. Yeah, so this one is actually a continuation. So here's this is the impulsive move. This is wave 3. So this is a more highly probable trade than the last one we looked at. This one, here's the impulsive move up. This is called wave 3. I talked about Elliott waves. That was very simple. Here's a big move up. Here's the correction right into this Fibonacci retracement zone. Now we can predict where it would go next using Fibonacci extensions. And we look for proof that this continuation is beginning, and we have it with positive momentum, right? Higher high, higher low. It failed once before, it broke to 200. It didn't break it as convincingly, so this time looks like it could be better, right? And if it is, and if it does take off, the price target is between these green lines, 25.81 to 31.70. That looks pretty good. Our stop would be here. It's easy to spot, right? Natural support levels. There's the stop, the last low. Our entry would be here. I like to just draw a line so I can just visually see the trade. And here's the target, low end of the target zone to be conservative. And so this is about a 2-to-1 trade. It's not bad. You might be, a conservative entry would be to let it clear this prior high, and that would improve the probability, but it kind of lowers the reward to risk ratio. Unless it puts in another low and heads up, then we would move stop to that new price. David got into Lilly a week ago, having good news, advanced position. Doesn't happen often, but it is great. Yeah, and we've all been on both sides of that, where we get into trade, you know, get an analyst upgrade or some news and it pops our way. That's great. We've also had it go against us. We had some analysts that you wanted to slap because the minute you get into a trade, they downgrade it. Yeah, that's happened. All right, let's look at IBB, this whole sector. Linda. And it was up Friday. This is actually a bearish pattern on the entire sector. Big move down there. There's the correction. It is still in a downtrend right now with lows, lower highs, lows, lower highs. So it would have to start putting in new highs for this to end. So the IBB is actually still in a bearish trend. David got into Lilly. Yeah, you had a couple good days there, huh? Okay, well, we've come up with a good handful of trading ideas, and what I'd like to do now is I'm going to be watching those and doing some more research, and you know, if I'm going to trade those in my account, it'll happen next week, probably early next week in the trading room, or for my stock pick subscribers. Yeah, absolutely got to use stops, David. Okay. So hey, let me take a few minutes and take a look at any charts you are interested in. I know some folks typed them in earlier. If you could type it in again, because it's, you know, there's hundreds of comments past, I can't find them. Arturo, I have an entire course, the Master Trader Small Group Training. It's on my website if you are interested, and it includes the scanning, right? It includes the scanning, but you have to learn, you know, the details of what we're scanning for before just the method of scanning. So if you're interested in the Master Trader Small Group Training, it's on my homepage, followmetrades.com. You can click here. The classes are going to start next Thursday. So if you're interested in that, you can go find out more on the website. I'll throw a link in for you. Oops. If anybody, yeah, that's not the main point of my presentation today, but yeah, people asking, I'll throw a link in for you. There's a link to the training. All right. Meanwhile, a whole bunch of symbols went flying by. John was first with CECE. Seco Environmental. So obviously Thursday, Friday had a big pop. If you look at this pattern, this is new. This is new. This is what we're looking for. So this could be a good one because, right, prior we had lower lows, lower highs, lower lows. What happened here? Right, we had a high, higher low, new high. Just under the 200, So let's let it break and keep this going. After a big dramatic move, you're going to probably see a pullback. So let's see if it keeps this going, breaks the 200, and where would it go to? Well, it looks like a Fibonacci retracement zone will be something like this, 8 to 1150 or 1050. That's not too bad, John. I would let it break the 200 first. I want to make sure, you see the 200 has been a significant resistance level. So I would trade probability for price, if that makes sense. QQQ, yeah, it's going to look just like the NASDAQ, right? And what we know is just like the S&P 500, we had a wedge over the last several months, weeks. We had a wedge, and it's the exact same thing on the S&P 500, where price compressed into this range. We call it a wedge or a pennant, the same thing, right? And on the NASDAQ and the S&P 500, we broke out of that. It came and found support at the 200. It broke above the cloud. It broke out of this wedge formation here. So this is bullish, and it could go on to new highs. It's a little late for me to try and trade a trend like this. I like to go find new trends. So I'm not going to be trading the Qs or the S&P 500 or the Dow. We're 9 years into a bull run. I'd rather go find some individuals that are just starting new trends and got, I like that idea of a couple we looked at that had 50% profit potential. In the next couple months. There's not 50% profit potential in the Qs in the next couple months. RTN, Raytheon for Patrick. So Raytheon, same kind of deal, big long run. It's a defense contractor. It's pretty good for them when we shoot off 100 or so missiles at $1 million a piece. That helps their books. But this is a pretty big move here, isn't it? This is a pretty big pullback. It broke the Ichimoku cloud. It found support at 200. It's sitting in the cloud. So it is neutral right now, figuring out, is it going to go on to new highs? If it does, I don't chase these mature trends. I just don't. It could go up, but I don't think we have the profit potential like we do in a new trend. So it's neutral right now, deciding what it's going to do. And don't be, hopefully you're not bummed if I don't like your trade. I'm very selective, and I'm looking for very specific criteria. And there may be great companies, and even Raytheon, great trend, but I'm not going to jump into it. Schlumberger, it's an energy-related concern. That is a messy, volatile chart. It is just all over the place. It breaks through resistance. It breaks through support. It moves at random. I talked earlier about having an edge in trading. I don't have an edge in a chart like this, and so I don't trade it. Caterpillar. So CAT, wonderful run up. Should be the beneficiary of some of the policies. Maybe not, who knows, with the trade war. So they are in a correction right now. They are putting in lows, lower highs, lows, lower highs. The correction zone is pretty close, and it's sitting here with support at the 200. So I am not interested in shorting it, and you don't want to go long in the downtrend and the correction. So for now, that's neutral as well. Joe, we did QQQ already. Gilead for Ann. No way I'm going to get to all the symbols. I apologize. You guys are awesome. You're typing them in, but I won't get to them all. Gilead is in a bearish move. It had this gap down. We want to watch and make sure it doesn't fill that. It's heading up a little bit, but the target's 54.08. So once it finishes, the kind of rebound from that gap down and heads back down, there might be a nice short on Gilead. I like it. Bill, I'll grab one of yours, okay? HD. Home Depot. Home Depot actually retraced perfectly into the Fibonacci retracement zone. It's just two lines, found support at the 200. It's a very orderly rule-following chart. So Home Depot looks good for a long up to 227, unbelievably. 227 up to 260, HD long. I like it. And it's ready to go right now. Patrick, I know you typed those in earlier, NVIDIA and Amazon. I'll take one of them. Let's do NVIDIA. Amazon, you know, off to the races, going to the moon. Too late to get long. NVIDIA. Same thing, you know, beautiful run, hasn't had a correction yet. It's putting in new highs. You know, it's a great company. It's a great story. It's a great chart. It's been a great trend. It's too mature. I'm not going to chase something like this. I would have to wait for a correction to form and trade that, and after the correction, the next move up, right? It's not a criticism of the company. It's not even a criticism of the chart. It's simply the fact that this is a very long, mature trend, and I have no way of predicting how much higher it would go. So, you know, and it's starting to consolidate, right? The momentum, even though it's continuing up, the momentum is currently smaller than at different times during the trend. All right. Sorry I couldn't get to all of them. Hey, Guillermo, happy Mother's Day, everybody. Yeah, thank you. Cat beat earnings and still went down. That's a you know, a lot of the financials experience that as well, right? Get punished for good news. Well, let's go ahead and wrap things up here. And let me see where we're at. So we went through and analyzed a bunch of them. It was good. We found some really good things. So just to reiterate, you know, I think these are important to have. Great trade setups with high probability outcomes, great reward to risk ratios, and great risk management. And then great trade management, right? Do you guys believe this? Do you agree that having all of these things would help make you a profitable trader? Just click that hand button. Raise your hand if you agree. If you have great trade setups, great risk management, great trade management, that will make you a profitable trader, or help anyway. There we go, lots of hands up, super. So how many of you are excited about the trades we just looked at? And the techniques and the scanning and the methodology and the results I'm getting, are you excited about that? But maybe a little unsure about, okay, what to do next? Maybe you feel like this guy right here is like, wow, that was a ton of information. I'm super intrigued, but I don't know what to do next. If it's okay, I'll spend a few minutes. I'll go over a special offer that can help you participate in these things. Okay? You know, these things are essential: great trade setups, great risk management, great trade management. I provide all of that to my subscribers. And, you know, if you were to get these a la carte to go get things, you know, the winning picks are returning about $1,900 a month on average over time. You know, getting detailed trade consultation a la carte, you know, from me or another educator. If you're getting one-on-one consultations, ongoing education, this stuff adds up, right? You know, typically about $5,300. But I'm going to offer you these things as part of my service: great trade setups, risk management, trade management on winning trades. You know, not every trade wins, right? 4 hours of detailed trade consultation every month, one-on-one consultation with you, ongoing education. You get access to this through my service, access to and help with winning trades, and it's not going to cost you, you know, $5,000. What I'll offer is access. Take a trial, take a 30-day trial of my stock and option pick service and my live trading room, both services, for 30 days for just $37. And then after the 30 days, you're going to want to continue, of course, and it'll be $97 a month, which is still a significant discount from the list price. The combined list price for both services is about $200. So you're going to get a great deal to start with, and on an ongoing basis. I just posted a link there. So, hey, Michael, we'll see you Monday morning at the trading room. All right. So here's a link. You get the trading room and the stock and option pick service, 30-day trial for $37, and that's 100% money back guarantee. Come try it. In the unlikely case it's not a good fit, you don't like it, you just send me a note. No questions asked, no hard feelings. Give you a 100% refund. I don't want anybody being part of, you know, the service that's not happy with it, but most people are pretty happy with it. So a little bit more about the stock picking service, the stock picks. I pick 1 to 2 trades per week on average. And again, the historic record is here on my homepage. Let me get there. So the historic record here, you know, there's no pictures of Lamborghinis and yachts and private jets. We're not talking, you know, some nonsense about, oh, you can take $1,000 and turn it into $1 million in 6 months. That's not realistic. But we can get solid returns year after year after year, and we're doing it. Even this year, which has been a tough year, right? We're just getting started. But the stock picks, again, 1 to 2 picks on average per week. What I do is I give you the high probability stock picks. I give you tools to follow the risk management technique that I use. I do provide option contract specs. So if you're interested in trading with options, I love trading with options. You know, you can either trade with the shares or I give you the options either way, right? Each person does their own thing. It includes an expiration month, strike price, and premium guidelines. You get strategic trade management. So throughout the life of the trade, I'm giving updates and alerts, email and text alerts on when to take profit, you know, when to close the trade, when new trades are coming out, when to move stops, and complete customer support. We answer all kinds of questions. Whatever questions you have, I believe in providing, you know, the best possible support. When you sign up, you're offered the opportunity to set up a one-on-one consultation with me. Happy to get to know you and answer any questions you have. And we have a live chat session every Wednesday evening at 6 p.m. Pacific, where you can log in, check out the current trades and ask questions and stuff like that. And then also I said, for this subscription, you also get 30 days in the live trading room on an ongoing basis if you stay at the live trading room. We're there Monday through Thursday for an hour and a half from 6:15 to 7:45 Pacific, 9:15 to 10:45 Eastern. And what we're doing is analyzing the overall markets. We're asking, you know, answering questions. Just like today, you've got trades you're interested in. We can look at them. We're scanning for more trades. We analyze major news, planned economic reports, how to trade them. We look at gold, oil, and the oil indexes and look for trades there. So analyze the overall market, provide trading answer questions, and update the trades real time. So that's in the trading room. And again, the price, today's offer for folks in this webinar, get both of them 30 days for $37, $97 a month after the trial. And here is that link again. And that's really it. I'm here if you have any other questions. And I sure appreciate you taking the time on a Saturday to come check it out. I hope you found it valuable. Hope you got some good information out of this. And if you have any questions, you know, feel free to shoot me an email. I am here to answer questions. I like interacting with customers and potential customers. I'm typing my email into the chat box. So it's dean@followmetrades.com. All right. Hey, you guys have any questions about, you know, what we covered today, about the picks, the service, the trading room? I'm happy to field any there. This is recorded, and I will send out a link with the recording after it's rendered and stuff.